Hi Fools, I'm Dan Kaplinger, Motley Fool contributor, and I'm here today to talk about whether the stock market is overdue for a big plunge. Now recently, as you know, the Dow Jones Industrials and the S&P 500 have successively hit many new records over the past several months, and that has many investors worried that we are overdue for a big pullback in the market. So, to bring real numbers into the equation, I decided to look back at the history of the S&P 500 to see just how many times we've seen corrections of 5%, 10%, and 20% to see if current conditions are particularly unusual. Now, looking back over the past 100 years or so, on average, you would expect to see corrections of 5% or more about 3 times each year. More substantial corrections of 10% or more usually happen about once annually. And when you're talking about full-fledged bear markets of 20% declines or more, usually you see one of those about every 3.5 years or so. So comparing that to the situation that we face now over the past 4 years since the bottom of the market in 2009, we have seen stocks rise substantially, more than doubling. And so let's take a look and see what kinds of corrections we've seen recently. Now, the most recent 5% correction took place last November. So we're a little bit past, if we see 3 corrections every year, that's about 6 months ago compared to about 4 months on average. So a little bit overdue, but not all that far overdue. As far as a 10% correction is concerned, the last one of those we saw was in August of 2011. So that's coming up on almost 2 years at this point, and that's a pretty big deal. The one thing, though, that correction was actually pretty big. It didn't quite make the 20% mark, but it came pretty close, between 17% and 18%. And that really is something, when it's a deeper correction, it kind of gets more weight. So perhaps arguably, you could say that we are overdue for a correction. Now, the big question, though, is does it really matter? The real thing for long-term investors to understand is that corrections happen, and there's really nothing that you can do about it. Whether you're invested in the Dow, in the S&P 500, in small cap indexes, international or domestic, it really doesn't matter. What you have to do is prepare yourself for the inevitable bumps in the road, and just reassure yourself with the fact that stock markets usually come back after they have their corrections as part of a healthy long-term market. To learn more about investing, please feel free to look around Fool.com for more articles. Thank you very much for watching this, and Fool on.